And breaking news, interest rates on borrowing are being mulled right now by the deciders. The Federal Reserve Open Market Committee kicked off its two-day meeting on rates this morning. They're huddling behind closed doors right now. Tomorrow's the big moment. Will they leave rates unchanged, cut rates, or maybe even hike them? With your markets and your portfolio in focus, let's get right to the floor show. Joining me now, Great Hill Capital Chair Tom Hayes, who at the start of the summer said on this show to sell memory chip and semiconductor stocks. What did you see back then in June?
It was the most crowded trade globally. Institutional managers, retail investors were buying calls at record highs. There was a gamma squeeze. The valuations were crazy. And this, believe it or not, Liz, is a cyclical business. Therefore, they can't command these high multiples. So I think the theme moving forward is sell these shiny objects that are overcrowded. You're going to see fits and starts. We'll get a bounce. They've dropped a lot in the last month.
Let me just say, this is since the day after you made that call.
Yeah.
SanDisk has lost 44%. Yeah. You can see some of these other names. You've got Marvell Technology down 37%. Taiwan Semi, which is not a chip, it manufactures the chips that the NVIDIAs and the SanDisks and the Seagates of the world put in there. So is there any level at which you'd start buying them? Because 44% drop is a pretty cheap point, isn't it?
There's still a little more pain. We took a lot of heat buying Intel at 20. We took even more heat selling it at 96 and 97 because it went to 140. Well, today it's at $85. It's going lower. So I think these things are going to bottom out over the next couple of months. We've got some seasonal weakness coming ahead with the election, with the midterm election years, with the fall seasonality. So I think theme is fits and starts. We'll get a little knee-jerk bounce here probably in the next couple of days or so. They're going to continue lower into the fall. Sell those shiny objects, buy the diamonds in the rough.
We'll get to those in a second, but because you were so spot on back in June about what to sell, what other signs do you see? And I bring up Oracle because you discovered something about Oracle, and you feel like this is a warning sign?
Yeah, if you remember that famous word, credit default swap from the great financial crisis, Oracle's cost to insure their debt is higher than it was during the great financial crisis, record spreads. And you're seeing this across the hyperscalers. They're record borrowing. They've run out of free cash flow now. They're turning cash flow negative, like you saw Google for the first time in history. And then Google, not only did they turn cash flow negative, they said, we're going to increase spending. The market said, we're uncomfortable with this. Not only have you stopped buybacks, you've issued debt. Now you've issued equity, you're diluting us as owners, and we're still not seeing the return on invested capital. And by the way, your earnings are inflated because a lot of your earnings are from other income. It's the mark-to-market on your SpaceX and the mark-to-market on your Anthropic. It's not operating earnings.
Yeah, year to date, if you bought it January 2nd, Oracle's down 37%. So let's get to those diamonds in the rough. And they are not necessarily tech stocks. These are consumer and, I guess, citizen-type stocks of things people have to do.
That's right. You want to be consumer staples, consumer discretionary. By the way, consumer confidence has actually bounced off multi-year lows. So the consumer is actually doing better despite the wreckage you're seeing in semiconductors.
Now, today we got a number that was a little bit lower than expected.
Yeah. It's been fits and starts, but it seems like it's starting to move in the right direction. This one, if you remember the famous song, My Sharona, this is My Sirona. This is called Dentsply Sirona. They are the leading dental supplier since the late 1800s. And the stock is down 80%. And you know these are my favorites. It's called a Turnaround Tom special. We think this can recover very, very quickly. And it has.
Why?
Okay, two things. They did a bad deal with buying Byte at the COVID peak, the invisible liners, et cetera. That was a bad deal. They had to write down $1 billion. Then they had this brilliant idea like Nike. We're going to go DTC and cut off all of our distributors like Shine, like Patterson, et cetera, et cetera. The new CEO, Dan Scavia, came in. He's brand new. He comes in from Globus Medical, where he had a four-bagger over 10 years. He was chief commercial officer, then chief executive officer. He's applying the same things to Dentsply Sirona. He brought back all distribution agreements in the last few months with Patterson, Shine, Atlanta Dental, et cetera. Operating leverage, he cut the dividend. They've got another $125 million of free cash flow to work with. Increased the R&D. So this one is on firm footing, firm balance sheet. We like this story over the next 3 to 5 years. And we think it can be a multi-bagger, Liz.
$2.7 billion market cap. It's up just under 3% today, and people need to fix their teeth. They do. All right. Good to see you, Tom.
Thank you
you
so
very
much.
much. Ticker symbol for Dentsply is
XRAY.
X-ray. How about that? Okay.
Yeah.